Hello and welcome to another update video about Bitcoin. Exciting days. Yesterday was exciting. Already Friday, you know, I think every day we've now made a new 2023 high. Getting pretty exciting. Certainly a lot of people buying still, yeah, pushing the price high. A lot of retailers buying. Someone asked me in the previous videos comment section if I think that retailers are still not buying. I mean, they must be buying, otherwise the price wouldn't move. I mean, if you know how the markets work, typically the retailers are needed to move the price. So I've made a video at some point about that, or we talked about it in the channel membership in one of our live stream tutorials. It's typically that the retailers, they typically use market orders, and market orders, if the demand outweighs the supply, that pushes the prices higher. They cross the spread on the exchanges in the order book. So the order book, is obviously where you have all the orders on an exchange. If the demand outweighs the supply, easy, and you cross the spread and the prices move because all these sell orders are basically bought up. And usually only retailers do it because they just go in with market orders and they're just filled immediately. Whereas if institutions are buying, be it Michael Saylor or someone else, they don't buy with a market order. They don't go to an exchange and buy with a market order. They buy either over the counter, not to move price, or they buy with certain algorithms, bots basically, that take their order, execute it over, I don't know, a week or so, hundreds, maybe even thousands of small orders, limit orders below the VWAP, which basically means that they are not crossing the spread. They are not moving the prices, which doesn't mean institutions couldn't move the price. They could if they want to, but they would be pretty dumb if they do it. Most money managers or buyers, that are responsible for that would lose their job if they really move the price. Okay, if you know how the markets work, that's how it is. So retailers must be buying this. They are pushing the prices. It's not institutions, okay? Very important. And still there is a lot of demand, as it seems, because prices are being pushed higher. So what we are watching for is potentially still higher prices, but now we've obviously reached our target area. We've been waiting for that for weeks and weeks and weeks. I think it could still push a little higher, possibly towards 41 to 42K. But the highest probability element of this entire rally that started on the 11th of September is likely done. There are two ways how this can still unfold. So either we are in this C wave here to the upside, in the white wave count. In this count, we've reached the minimum expectation, which is the 61.8 extension of the of the A wave. That's here 39,550. Ideally, I'd like to see the 1-to-1 ratio reach next, 40,870, so pretty much 41K. In the yellow wave count, we might get another pullback in wave 4 before another high. So which one it is, we will have to see. I can't give you a definite answer for that. Support for wave 4 in the yellow count is 37,160. And in the yellow count, basically, we're dealing with a wave 1, a wave 2, wave 3 unfolding right now, then a 4 and a 5. That would be basically an ending diagonal, as it seems. The third wave, we ideally wanted to reach at least the 1.236 extension. It has reached that. Okay, it has reached that, which is ideal. So from here, in the yellow count, the pullback could occur. Also, if we look at the yellow count's subdivision, we can say that obviously the B wave of wave 3 finished here on the 27th of November. And this looks very much like an ending diagonal in itself in wave C. So that could be over. I mean, I've got 5 waves there, right? So I've got a 1, I've got a 2, I've got a 3, I've got a 4, and a 5. It's just that, what is this? And it's not entirely clear what this wave count is, but micro counts can sometimes be a bit ambiguous. But I have 5 waves, you could argue, in wave C in an ending diagonal. So just be prepared for a potential pullback. If that pullback occurs, it is likely going to send us down into this region, possibly, okay? 37,160 to 38,123. Only below 37,160, I would really have a strong case to say that this entire rally that started on the 11th of September is over. At the moment, I would be watching for ideally one more high, either in wave 5 or just straight away in the C wave. I really haven't got a very clear view of what the C wave looks like in terms of subdivisions. Might be able to add that later when we get a little bit more price action. But so far it's looking good, so I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. Here you can find additional content every single day. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, check out our stocks and S&P 500 service. You can find the links for those as well in the video description. Thanks a lot for watching. Bye-bye.